Okay, I hope you got your coffee. Now, let me pass the floor to Melanie for our second panel on transaction monitoring and auditability. So, Melanie, floor to you.
Hi, everyone. Thank you so much for being here and welcome to panel 2 of the IPEN webinar. Just as a little bit of background on what we're going to discuss during the panel, CBDC, like any other form of currency, needs to be audited to a certain extent by the law, for example, to ensure compliance with anti-money laundering or counter-finance terrorism and tax evasion laws. And considering that CBDC could potentially enable the accumulation of sensitive payment and personal data to an unprecedented scale, CBDC needs to be the monitoring of CBDC needs to be balanced with privacy and data protection of citizens, which are fundamental rights. So we hope that this panel is going to give a good understanding of the more common CBDC solutions implemented around the world today. And also we want to focus as well on the more state-of-the-art solutions, privacy-enhancing technologies. And we want to see how the balance between privacy and auditability is struck. So here with us today to discuss all these points are 3 very esteemed panelists. First of all, we have Mr. Veljko Andrijasovic, who is a technology expert in Sweden Central Bank, and he was responsible for the technology activities of the e-krona. Second, we have Mr. Carl Wust, who is a faculty member at the CISPA Helmholtz Center for Security and Information. Thank you so much for being here. And lastly, but not least, we have Mr. Meigejart, who is head of sales at Chainalysis for the private sector of Germany. Welcome to all 3 of you. So without further ado, maybe we can jump into the first question for this panel, which is, what are your general impressions on the auditing of CBDC, and what are the main approaches and solutions that you have seen implemented or implemented yourself in the field so far? Maybe, Veljko, we can start with you so you can tell us about your experience with e-krona, and then we can speak with Carl and Maik.
Sure. I hope you can hear me. Yeah, in Sweden, I can say we started testing our elaboration with the CBDC technology. I mean, doing hands-on and piloting for 3 years ago, a little bit more than 3 years ago. And from very beginning, we have been focused on the policy issues, and it's a particular part within, we call it belonging to policy, is a privacy question. And the policy correlation is actually to the monitoring and auditing of the information. We have taken care and including different type of requirements correlated to data monitoring, I mean information monitoring or transaction monitoring, and auditing correlated to the privacy issues. Certainly being European Union country, we follow GDPR ruling and even internal rules about financial confidentiality, which are pretty strong in Sweden too. And we, just to make it clear that we didn't make, we didn't make any decision about the final solution for e-krona. So what we are doing is we are piloting and elaborating different type of technologies in order to see how they could fulfill different requirements and also help us to open different type of discussions. In our pilot project, we implemented Corda solution, and we are keep doing that now. We are closing 3rd year, hopefully continue next year. From the very beginning, as I said, we tried to implement we focused to implemented privacy in the system, help us a lot to understand what are limitations, possibilities, and also run legal discussions about different issues and let's say the level of compatibility or compliance with the GDPR and other regulation that we need to fulfill. Experience until now is that what we are testing, we didn't see that we can fulfill all expectations. Additional to that, I can say that we also found that there is a lot of questions on the legal side that need to be answered before we can be sure that one, another, or third technology solution is or is not working. But also as a part of that, we tested different PET technologies that I will talk a little bit later about. And we went, I mean, we certainly discussed, we analyzed, but we also did some implementation in order to test and to see what's possible to be done. Related to the part of monitoring and auditing, we have implemented not pure monitoring, I would say, because this is elaboration and the piloting, but we implemented functionality as the preparation and collection of data, trying to cover the full spectrum of data that we need in order to provide monitoring, in particularly anti-money laundering, for anti-money laundering, counter-terrorist financing purposes. Let me stop here for the first question.
That's perfect. Thank you so much, Velshko. Can we hear from you, Carl?
Yeah. So I think that, first of all, the technical means for auditability and monitoring hugely depend on how a CBDC is implemented. So one of the simplest ways to implement a CBDC would be to essentially create bank accounts that the central bank manages, and this would constitute the CBDC, and it would be very easy to monitor. We would basically have the same means as currently with commercial banks. On the other hand, this would of course be very bad for privacy, because the central bank would then see all transactions. So this is actually worse than what we currently have with commercial banks, because commercial banks see a subset, and in this case, everything would be visible, which requires very strong trust in the central bank for privacy. So if we actually want to achieve privacy, this needs to be built into the system itself. Now, if we look at other types of solutions that are kind of blockchain based, so this is actually independent of whether these are decentralized systems such as Bitcoin or more centralized blockchain solutions such as Corda or Hyperledger. By default, these don't provide any privacy. So generally, all of the validators in these systems will see all information, and this means that transactions can be relatively easily traced. So in those systems as well, or in general, in those systems, privacy actually might be worse than in a fully centralized system, because we have multiple parties that have access to all of this information. So again, to achieve privacy, this privacy really needs to be built into the transactions. Otherwise, of course, monitoring is easy, but as mentioned, this comes at the cost of privacy. In all of these kinds of systems, so in fully centralized systems, in permissioned blockchain systems, and in permissionless blockchain systems, we can achieve very strong privacy protections, but those then, of course, make monitoring harder. So that means that then into these privacy solutions, we need to build in concrete means for monitoring or for auditability, and this then depends on what we want to achieve. And they're generally one approach that is often proposed in research, and also otherwise from a policy point of view, is that some party is designated as an auditor and gets access to transactions under some circumstances. So this is not really a technical mean, or there's some technical means involved, namely in encryption mostly, but in those cases, this party could then, after the fact, de-anonymize some of the transactions in the system. From a privacy point of view, I don't think this is ideal, because this means that we now need to trust this specific party to not de-anonymize transactions that they shouldn't de-anonymize. So again, a better solution is to create a system that has privacy by default, and where we have specific mechanism that at the point of creating a transaction ensure that only information is revealed that needs to be revealed from a policy or from a compliance point of view. So that if I create a transaction, that I know at the point of creating transaction, I'm exceeding some kind of limit, for example, for how much money I can receive within a certain time interval, and then I reveal this information about myself, but then I can still decide whether I want to perform this transaction or not. I think we will talk a bit more about this play between privacy and auditability later, so I'll stop here for the first question.
Thank you, Carl. And Maik?
Yeah, sure. I hope you can hear me well. So yes, for us, Chainalysis, and I think many of you know us already, cryptocurrency transaction monitoring based on blockchain analytics is one of the main business areas we are doing. We currently monitor more than 100 cryptocurrencies on more than 20 blockchains. On some details, CBDCs are similar to, and on some details different from existing cryptocurrencies. So unlike cryptocurrencies, CBDCs are considered centralized and they are government issued. Based on the design consideration, a similarity could be that the value of the CBDC is bound to a cryptographic token, and this is the case with every cryptocurrency. On which technology CBDCs should be issued is also a very controversial discussion at the moment, as we already heard a lot about that today. So most countries looking to issue a CBDC will use blockchain technology to do so, but these blockchains will be different from the blockchains where cryptocurrencies are running on. The central banks of, for example, Sweden, I think, and France have moved forward with CBDC pilots that use permissioned blockchains, as already mentioned by Carl. That is a centralized variation on the technology used by Bitcoin and Ether. These permissioned blockchains will be built on top of existing blockchains and existing infrastructure like Ethereum, for example. A permissioned blockchain is a distributed ledger with an additional layer of access control. This means that certain actions which are necessary to have a centralized approach with and be governed by the issuer, such as issuing tokens to control the amount, validating the blocks, or viewing the transaction information like senders and receivers information and the amounts, can only be performed by certain participants of the networks. For CBDCs, this might be the central bank, it might be some commercial banks, payment service providers, or others which will be granted the right to do so by the central bank, by the ECB, for example. Depending on the type of blockchain and what data on the specific CBDC is then publicly available, blockchain analysis can also be one of the core technologies for transaction monitoring in such environments. But even if it is a closed environment in which transaction data is not publicly visible, it must of course be ensured that the principles of regulation in the context of AFC and counter financing terrorism are complied in a verifiable manner. What I also think is that CBDC also needs to interact with other digital assets and cryptocurrencies in the future. Therefore, traceability across different monetary systems and tech boundaries is just as necessary as the integration in existing KYC processes. Since blockchain analysis in the cryptocurrency environment is already a well-established way of checking and monitoring transactions with regard to AFC, AML, and CFT, completely closed and centralized CBDC environments would of course make this monitoring approach impossible. And separate monitoring tools would have to be used or to developed in the first step. In the end, it's like this. We can't analyze what we don't see. Our ability to provide a solution here depends to a certain extent on the design and the technology decisions. And this is, as we already heard today, an ongoing discussion.
Thank you, Maik. A lot of interesting points already raised. So maybe we can move to the second question, which is, in your experience in relation to the more common approaches to CBDC implementation, what validation architectures were implemented? And how do we ensure that such solutions don't have any backdoors and that they're not tampered with?
Yeah. As I said, as a part of our work, as we realized during the first year that the privacy could be a potential issue. So we start looking in different type of technologies that could help us to enhance privacy in the current solution. And in addition to that, as we from the very beginning had decided the solution that we are testing and piloting is not going to be the final solution. We actually widened the area we are looking at in the last year and look even in the other technologies, looking mainly in the different type of DLT, but also even other available technologies on the market, such as digital bill and the kind of offline solution, different kinds, but even looking at the existing solution kind of traditional core banking solutions, trying to compare them from different perspectives, including privacy and auditing and monitoring. If we talk about what we did in the pilot related to Corda technology together with our partner, we looked at the different technologies. Certainly, cryptography is heavily deployed in the solution from the very beginning. We looked in the different type of solution called chain snipping, moving like cutting blockchains. Corda is a little bit different than in Bitcoin and Ethereum. That blockchain is actually technology used. We call it tail or back chain of transactions correlated to one coin or one token that we have. So what we try to do is test the possibility to cut off or make short those chains, trying to make exposure of information as little as possible. We didn't implement it in the tested key rotation technologies to see how we could make it more private and protect the private information, personal information of the user in the system. And looking further in other type solution than Corda, in this case, we are also looking at, actually at the moment, we are investigating zero knowledge proofs, zero knowledge technologies in general, trying to understand how it could be implemented and how it can provide support for the privacy. And at the same time, we are looking at the security issues and ensuring that it is enough secure and safe for end users, so we really protect the privacy in the proper way. Correlation to that, we are also looking in possibility to provide the information in a clear way or enough clear way that's needed by the rules and regulations for the different type of players on the market, such as different institutes, banks, central banks, certainly. People and institutions that have a legal right and the need to get that information. So for us, it comes down to finding a way to protect privacy, protect personal information on the level that is enough high, but still make it available for parts that have obligation actually by the rules and regulations to do different kind of monitoring and auditing on that information. We are still in the piloting and development, and we are still looking at those different technologies. Again, didn't make any decision. We make it very difficult to say that we can say or could say one or another or third technology is better or first choice. Again, huge focus from us is actually on security and safety part for the end user, meaning that we are looking really to ensure that technologies that we could think to use are safe and secure from the point of personal information. Thank you.
Thank you, Vasko. Very interesting to hear how its security and privacy is being ensured, in particular in the eCrona pilot. Maybe Maik, you want to respond, and then Carl?
Yeah, sure. So, your first part of the question was, what experience have you had in implementing PT? So, to give you a short answer, and probably I can stop there. Absolutely none. So, but let me explain why. I can give that short answer. So this is mainly because of the differences between transaction monitoring we currently see in the traditional fiat world and the world of cryptocurrencies. So the key difference here is technology, or specifically the blockchain. So the advantage of public blockchains is that we have no connection to the personal identifiable information. So we don't touch any privacy of any user, but can nevertheless identify the source of funds and the involved services of a transaction. All data that is required for this is transparently available on the blockchains. And for me, in my opinion, this is, and I would a little bit disagree with Carl, not a privacy concern, because yes, even if the data are publicly available on blockchains, they are pseudonymized. So you don't see the individual behind that. You can't build the bridge between the pseudonymous data and the real individual who's acting in the background. But probably you mean it in a different way, so we can discuss this probably a little bit later on. But in a pseudonymized, not human readable format, you will find that information on that blockchains. And with our tools, we analyze, cluster, enrich, classify this data to identify the source of funds, to understand the transaction path and those involved. So, however, involved does not mean the natural individual behind it. We are identifying the services behind the majority of transactions on cryptocurrency blockchains. And the majority of transactions, more than 2/3, are running through services like crypto exchanges, marketplaces, and peer-to-peer exchanges. And the majority of these services are also KYC regulated. We also can see and provide necessary information if a private or self-hosted wallet was involved in a risky transaction. And that gives the financial industry all the information that they need to act within the regulatory guidelines, and they can file corresponding reports and so forth. But only the KYC regulated service is able to map pseudonymous data coming from us, from blockchain analytics, to the real world customer who owns a wallet at this service. But again, the public blockchain itself, where we do our analysis based on, will never contain PII and therefore never touch any privacy. This might be different with CBDC, where the intention is to have all the PII of the sender and the beneficiary bound to the transaction. Absolutely. This can't be realized on a public blockchain, since in that case, everyone could have access to that data. As previously described, it could be done with a permissioned blockchain, which gives access to sensitive and privacy-related data only to granted persona. Another method would be that CBDC is issued indeed on a public blockchain, but in that case, there has to be a separate information and messaging layer or messaging bus, which exchanges all the sensitive information between the involved parties like banks, central banks, and the exchanges. So this messaging channel or layer has to be established outside of the blockchain layer to maintain that confidentially. Side note from me, this is considered to be the technology of choice for the upcoming TFR regulation for cryptocurrency. So there's the requirement to also send additional information about the sender and the receiver. And this has to be established with an outside channel, an outside messaging bus, because normal blockchain technology doesn't allow to add any information to any further information beyond the data necessary for a transaction, like wallet address and transaction hashes. So even if you want to provide privacy related information, you can't do it on a public blockchain. It's not possible. So in short, privacy enhancing technology is not necessary for blockchain analytics on public blockchains because we do not invade privacy. Which solutions have to be created for the monitoring of CBDC depends a lot on which technology the CBDC is emitted on and how open or closed these environments are then. As of today, we have no well-founded experience with this either, to be honest. As is well known, in most cases, we have not even reached pilot status with any CBDC, let alone that the basic design discussions have been concluded. So we have to wait. So what will be the tech approach in regard of CBDC, and what role blockchain analytics can play a part within that technology decisions? So far from my side.
Thank you, Maik. Carl, do you want to tell us what you think?
Yes. So let me first address the point that there's no PII available on the blockchain, and that there's no privacy issues with data on the blockchain. This is of course not the case. So I know that or the way I understand it is that you don't search for this information, but based on the data that's available on the blockchain, you can very easily trace. So on the blockchain, in this case, something like Bitcoin, not something like Zcash that actually includes privacy protections. You can trace pretty much all transactions, and you can cluster them to figure out which account belongs to one entity. And this can very easily be combined with additional information, such as monitoring the peer-to-peer network to see which IP corresponding transactions are coming from, or even if I at any point interact with another person and with their address, with their Bitcoin address, then I know this link, and then I can follow up on their other transactions, and I can see exactly what they're doing. So this is really in something like Bitcoin or Ethereum, there's very, very limited privacy. So you can use it in a way that you get some decent privacy, but this requires very careful use and is not the standard. If we actually want to provide privacy for users, then we need to add additional mechanisms. By default, everything on a blockchain is public. And if we do this in a CBDC, we can use similar mechanisms that we can use on a blockchain. In particular, we want to ensure that we can verify that the transactions are correct without revealing any information about these transactions other than that they're correct. And this we can do with zero knowledge proofs. So these are mathematical constructs that allow us to prove a statement without revealing anything about anything else. So I can prove that I created a transaction which is valid, but whoever verifies that transaction cannot see what the transaction value is, who the sender of the transaction is, and who the recipient is. And this is something that in the blockchain space, Zcash does, for example. It requires quite a bit of additional effort on the side of clients, especially if we would want to scale this up to a large number of transactions per second. So it requires several seconds of computation to create a transaction, but most importantly, it requires the clients to keep up to date with a lot of information from the blockchain, which makes it hard to create so-called lightweight clients that allow a client to just store some small piece of information. But if we want to move this into the CBDC space, then we can actually do more. And this is something where there has been quite a lot of research in, I would say, the last 2 years. So there are several systems in research that work on exactly this and work on providing strong privacy in the setting that can be combined with the enforcement of compliance rules. One of these systems, Platypus, that Christian mentioned in the previous panel, is some work that I did together with some colleagues. And these kind of systems, we use zero knowledge proofs to prove that a transaction is valid. And this allows us to perform state transitions where the users kind of manage their own accounts. And I prove that my new account balance that I have after the transaction corresponds to my old account balance minus the balance from the transaction. And this is then combined with something similar to eCash, which is technology from the 80s, which is also what Knut Thaler is based on, the system that Christian works on. And this makes it very efficient in the centralized system. And in addition, it makes it easy, or somewhat easy, to add in the enforcement of compliance rules. So what we can do is we can say we have a KYC process that gives us a certificate that allows us to participate in the system. And then in every transaction, we can prove that we are compliant with all compliance rules and our transaction is valid, of course, and we have the certificate. And if we want to create a transaction which is not compliant, then one option would be to say, well, we cannot create this transaction. But another option is that we say, in that case, I am forced to reveal information about the transaction to a regulator. And this is, I explained this a little bit based on the system that we designed, but there's a lot of research currently on these kind of systems that haven't really made it into practice yet, because this is very cutting edge research, but I think we will see more in that space in the next few years. And this kind of research shows that it's actually possible to get very, very strong privacy properties. So this means that there's nothing that's revealed about the transaction. So this gives us actually better privacy in the normal case than cash, because with cash, we have serial numbers, and usually if I withdraw cash and I spend it in some shop and then it gets deposited, so in theory, you could check where the serial number was withdrawn and where it was deposited. And something like this is not possible in this kind of system. And at the same time, it allows this kind of monitoring, but in a way that enforces privacy. So the privacy cannot be violated after the fact. It needs to be known at the point of creating the transaction. Yeah, I don't want to go over time and talk too much. I think I already used up quite a bit of time, so I'm going to stop here and yeah.
Still disagree a little bit.
Thank you.
But that's okay, I think. So in regard of privacy concerns, so if you consider pseudonymous data on public blockchains still as privacy related, okay, but normally you can't, even if you see the players, you see only the pseudonymous data of the players, you see the transaction between the players, you probably see behavior around the transactions, but you don't know who's the player behind that. Only the service who will be involved is transparently shown by us, but not the individual. So, and I don't think that is privacy related information. But yeah, you might have a different opinion about that.
So this is maybe a very, very detailed point. You're not showing this because you're not analyzing this, but it's possible to analyze it. So it's actually fairly easy to analyze this. As soon as you interacted with any entity, then you can easily trace their transactions. And since you interacted with that entity, you will usually know their identity. For example, if you look at the cryptocurrency exchange, they will be able to match on-chain pseudonyms with actual identities. And
yes.
If then whoever owns that pseudonym performs 100 transactions, they will be able to see all of those 100 transactions. And so this is just because you're not analyzing this and not looking at this doesn't mean that it's not possible.
Yes, yeah, you're fully right. So the service who knows the individual behind a wallet, an address, everything else, yes, they can bridge that information to that pseudonymous data. And they have to make sure that this will be in the guardrails of regulation and privacy concerns which might come up from that scenario. Yes.
Thank you so much to both of you. Just in the interest of time, we have to move on already to the third question, but it's very interesting to get the different perspective based on all the different systems that are being developed. So the third question is, what is your opinion on the maturity of PETs for CBDC use cases? And can you talk to us a little bit about their different pros and cons? Maybe Veljko, you can go first, and then we can hear from Carl and Mike.
Yeah, sure. As I said, we tested a few of those technologies, a few others we are looking at. I would say that, at least my opinion is, they are not fully matured yet. What we see in a recent period, in the last year, let's say it's really a lot of work around zero knowledge proofs, in particular in the CBDC area. So my expectation is that we will very soon, as we know in technology world, it's very difficult to predict what soon is. But I would say probably with the next few years, year or 2 or 3, maybe we will see a mature solution that will solve the issue, let's call it that. We do believe, actually, what we are also focusing on is being a central bank governance institution. We need to ensure we are actually supervisory institution for a lot of rules and regulations and laws internally. So we need to ensure that the solution that we will define, implement, actually follow and support all those different rules that we and other regulation bodies in Sweden introduce and supervise. And the part of that, as I said at the beginning, we are really looking at not only the part to protect privacy, we also see let me say, the full picture. We want to provide the privacy. At the same time, we want to provide possibility for the parties that are alleged, have a legitimate case or even obligation to see needed information. And particularly when I'm thinking is monitoring, for example, anti-money laundering, counter-terrorist financing. Those are two particular areas where aggregation of data and putting and correlation of data is really needed for the institution in order to provide the obligation they have by the laws, rules, and regulations. In that point, I would say that what we can see for the moment being, it's a really lot of effort and the focus on the privacy part, and probably not so much on the other part, say auditing and monitoring of the data. But I'm pretty sure that it will catch up very soon. As soon as we start discussing and solving issues with the privacy, we'll start moving to the other part. And it's also important to consider that this market is not extremely huge. I mean, that's one central bank per country in the world. So some things are moving, maybe not moving that quickly as a lot of us would like it to be, but they are moving forward. And again, just to conclude it, a lot of work, particularly in zero knowledge proofs, but we also see layer 2 or few layers of tiering models, a lot of work in that area too. Again, from our point of view, so Riksbank of Sweden, I can say, or Central Bank of Sweden, I can say that we didn't come to any kind of conclusion, except that we can say for the moment being, we don't see any mature product PET area. Mainly, I would say, add that we are certainly, I can't tell again anything about security or safety point, but we see huge, but still issues related to performance. And to make it like a picture clear, we are implementing retail CBDC solution, meaning a lot of smaller transactions where performance is really an important factor. Thank you.
Thank you. Mike, do you want to respond?
Yes, I really can make it short. So because I'm not really the specialist in regard of such technologies, because at the moment we are not really so much confronted with so much upcoming privacy concerns. So, but I think that's my personal opinion. So bringing CBDC together with, for example, self-sovereign identity could be an approach to secure the CBDC environments and transactions for sure. So, but I also see the topic of SSI is still in its infancy in the European Union as well. So I think the EU is investigating a lot of possibilities in regard of SSI for the proof of identity as part of a working group. So I saw that in a different article. And in addition, it creates an eIDAS compatible European framework for self-determined identity. There is behind that the European self-sovereign identity framework. But however, we have not yet progressed beyond the laboratory stage, sorry, in any of the projects, I think. And so on the other hand, in the future, the most diverse measures and technologies must also find their way together in a meaningful way. So we also have to make valid design considerations for CBDC, and we have to think about that is not a separate island. It has to interact with many things outside of CBDC. So, so we don't yet had a lot of clarity about a CBDC issued in the EU, and yeah, therefore I think there are a lot of considerations to do until we have a variable solution for everything. But yes, I think SSI would play a variable part in that game. Thanks.
That's very interesting. Thanks. Carl, do you want to let us know what you think about PETs?
Yes, I'll try to keep it short so that we still have some time for questions. So I think in general, these techniques, in particular zero knowledge proofs, are mature enough to use. There's currently no like full scale, immediately deployable solution to the best of my knowledge for CBDCs currently. So it would require, of course, engineering work and implementation work. But as a technology, this is mature enough to use. And this has been used for 6 years now in Zcash with a market cap of roughly 700 million, I think. And there has not been any attack on the guarantees that these zero knowledge proofs provide. So I think this is usable now. There have been a lot of developments in this space in the last few years, in particular due to the prominence of cryptocurrencies, and we still see ongoing developments. So these kind of proofs have become much faster. There are fewer requirements for trusted setups and so on. And so I think this is really yeah, this would be the way to go.
Thank you. It's great to see that there's a lot of things to consider and that the upcoming developments that are going to improve privacy. And that brings us, I think, to the end of our questions, and I will pass the floor back to Stefano for any Q&A questions from our audience.
Yes, thank you, Melanie. Well, we had some questions and some debate in the chat, but with an eye of the time, I think we can start from the one I have under my screen. How do you see the role of homomorphic encryption, which seems to be enough mature to be used in such simple operation, simple between brackets, and what privacy CBDC related use cases could benefit of it? I think it's a question for mostly our colleagues from the central banks, but also for Carl. So, floor to you, the one who want to respond on this.
I can start if yeah. So
sure, perfect.
I think for basic transactions, homomorphic encryption is generally not necessary. There are some potential use cases for privacy-preserving smart contracts, where this can be potential, or where we can have a potential use for these kind of systems. Homomorphic encryption in general is very expensive, so computationally expensive. So it's not very practical for most things. And I think that for most applications, there are probably better ways to do this. But in general, yes, for any kind of system where we want to provide private computations, which might be the case for smart contracts, it could be used potentially.
I can correlate to that. what Carl is saying, we have actually looked at homomorphic encryptions, and we found that basically we are following the market. Let me start this way: we are following the market. We are following what's going on the market and doing part of our own internal researches. And we look at homomorphic encryptions. They are particularly, it seems to be very promising technology. It's solving at least a part of issues, and but it's very expensive, as Carl said. I fully agree with that, computational wise, and in the end, I mean, money wise, it's a cost, which is very important. And as said, it seems that the market is going in the way there are other available technologies that can solve basically the same problem in a cheaper and simpler way. I don't think that we see now. I should say, for my answers are really in the scope of CBDC work for the moment being. I didn't see so much work in this area within CBDC arena in the recent time. We say at least half year or even more. And that part, and also the limitation of maybe not having possibility to do everything that we want to do. Certainly didn't see examples of over that in the market. We are not really pushing so heavily on this technology. Again, it doesn't mean that we will not do that in the future. It depends on how development will go.
Good. Let me say that we have space, no, Melanie, for one last question that I just received actually, and it's about the offline use cases. Which auditability approach can be implemented in the most privacy-preserving manner, and how? Who want to comment on this?
So just to understand your question, well, the question is not yours, but the question properly, it is actually use of these kind of technologies in offline case.
Yes, exactly. Yes. I think that the question refers to the offline tools that we're discussing mostly in the first panel, where CBDC can be implemented, outside the clear connectivity scenario, clear connected scenario, sorry, and which auditability approach can be implemented in the most preserving manner.
We can see from our point of view, we are doing work in the last 2 years and continue doing work in offline area, and we are fairly open for any kind of technology that can provide the wanted result, meaning having devices without connection to the central systems or central units to make transactions between each other in the secure and safe way. And in that way, any kind of technology that we find it could be fit or feasible in this way, we will look at use. Offline, in particular, have some requirements which we are dealing with the transaction in offline mode without really having access to heavy process power. I mean, usually the processing of the information need to be done on the card plus mobile phone or point of sale terminal without any kind of connection, any possibility to check correctness or authorized information on some central part. And using these kind of technologies for within the same group of issues or questions that we are looking at, can it support the performance, meaning enough short time response, certainly providing the level needed of the needed level of security? Could it be supported? We are looking at a few of those technologies. It's premature for me to name them. We are looking at that, but we didn't come enough long so I can share anything within this area. Again, main consideration from our part is actually on the performance and practicality side, to be honest with you. And some others feasibility side also. Thanks.
Thanks a lot. Carl, I see you open the mic. Maybe you want to comment.
If I can quickly add something there. So in general, offline payments are difficult because generally, if we rely on some trusted hardware, cryptographic keys can usually be extracted with invasive attacks, in particular if you want to have low-cost devices. So generally, preventing double spending is not possible for any kind of offline payment system. What can be done is double spend detection, which means that if we double spend using some offline means, so this is also something that has been around for a while in research in the context of eCash, then we can detect who performed the double spend. And this could be used together with some risk acceptance to say, well, we rely on kind of a combination of these kind of systems and trusted hardware. But generally, this would probably allow performing double spends, and so it's not ideal.
Thank you, Carl. One maybe last word for with an eye to the timing to Mike, if you want to add something also. You were very silent.
I just saw a question, what is the GDPR legal basis for Chainalysis? So we are acting based on the standard data processing agreements here in the EU. And yes, there was an additional question based on that question. Is Chainalysis then a controller or processor? We are a processor in that case. So just to answer that. And yeah, so nothing further add from my side so far.
Thank you, Mike, for this remark. Melanie, I think questions are done to you to conclude.
So with that, I think panel 2 is concluded, and I want to thank the speakers again so much for coming here with us today. It was a very interesting discussion. And yeah,